team.
Ladies and gentlemen, welcome back. Chart Talk 84 in the building. Shouts out to Randy Moss. Garrett, throw a little Randy Moss montage on there.
The highest leaping ability and the best hands. That freakish combination of those four, I don't think we've ever seen before. I'm not sure we'll see again.
Let's jump right into market outlook, huh? So I mean, the SPY, S&P just continues to grind higher. We're sitting here at this upper resistance in the channel. You know, the action's still healthy, but at this point, it seems like everyone's waiting for a pullback. So what's the market do? Doesn't give anyone a pullback. That's, the market's job is to frustrate the maximum amount of participants. And that's what it seems like it's been doing. The market's just been so strong. Today we got, tech and the financials leading, which was pretty positive to see for, short-term trading in the tech space. But we're just grinding higher. Everyone and their mother's looking for a pullback at this point. I think one has to come soon, but timing it is going to be very difficult. We have the biggest week of earnings. We're in the midst of it. It really starts, Tuesday, Wednesday, Thursday. Amazon, Microsoft, Facebook, Google, all the big guys that are really market movers are reporting. So for that reason, I'm keeping my own trading on very short-term time frame aspect. Just kind of grinding it out every day. What are you thinking over there, Ben?
Same thing. We always refer to like the Mickey Mouse flag, which is like a very tight, small bull flag, and we see that in the SPY. It's we're in the 2% range. All-time high is 418. The most recent pivot low is 410. So if you're getting nervous, SPY below 410 is when you want to free up some cash. And then sector-wise, the only thing I would avoid is probably energy for some time. It just seems like we've had a similar run that we had back in March, where energy had this big run up off of lows and just slowly kind of like fizzled out and pulled back. And we saw another similar run starting in like November in energy. That it started to kind of top out. We're starting to see like kind of the same pattern again, where I just think if there's an avoid, it'd be kind of avoid energy for the foreseeable future.
I have a couple of energy names that I'm actually looking at. VLO, for example. I was thinking this is a pivot. This is the massive run and this is a pullback. Mm-hmm. So who knows? We'll see another move like that. I hope so. Gas prices are fucking through the roof.
Yeah. So again, I mean, I think definitely up through those. Even with VD, if it goes back up through 68, 70, I think that same with this VLO, same kind of chart, but just looking at kind of how it was that last time around, when that first little pullback, it's like, oh, let's buy up first, and that's the thing. If we buy up through that pivot, that's great. But if we want to keep kind of heading lower, which it has been recently, then it's just an avoid for us because we're just not going to be buying above that pivot high. Just won't get there.
Very fair.
So with that, you want to jump into some of the top ideas?
Yeah, I mean, a lot of things went today, and again, I'm really waiting on these earnings. To get involved in anything for more than 2, 3, 4 days, I'm waiting on earnings for all these names. So I have my foot off the gas from a swing trading standpoint. I still like the Snapchat, but we got news of a secondary offering after hours. That's never good in the short term. I think through these highs, 63, it still looks great. Tomorrow, this GRWG, really nice support area here. This 47 area right where it closed looks pretty good for a bounce. What else? I like this PLXS long term. Another earnings name at highs. I just want to see a flag, so it gives us a tight entry. And our buddy HCMP, began to break out today. Didn't really give much follow through. They got earnings May 5th. So we'll see if they can break out. I got a slew of like recent IPOs I'm looking at, like this TUYA. When the market's acting well, usually the IPO market acts well. We saw that in like Roblox today. So I got a bunch of these names I'll save for the alpha chat, but I have my foot off the gas until we get the rest of these earnings in. What you looking at?
I think the main one, and just going back to Snap real quick, when stocks have secondary offerings like Snap had today after the close, short term it's definitely not a great sign if you're swinging the name because the name's in a gap down, but it's typically a good sign for the stock overall when they're raising money near highs. It's usually a very bad sign when a stock has a secondary offering near lows. It's it's basically a death sentence if they're raising money when the stock is very weak.
Except I'll give you the exception for that is something like a fucking GameStop where it's up like 400% a day and then they do a secondary offering. They're just taking advantage of the stock, of the manipulation of the stock. Yeah. That is very different from a Snapchat situation.
Yeah.
Just wanted to clarify.
Yeah. That is definitely very good. good one.
Right, because it's like, well, GameStop's up 300%. They're raising. That must be
Yeah.
good. It's like, oh god.
It's like no, they were raising it. Well, even for them, it's like they were raising it. The highest that stock had been, but again, not a good sign.
Yeah. They
They're
just fucked it up.
They're just collecting the money. They're not really trying to reinvest it. So the other two that I'm keeping an eye on is MELI. This is actually one that I got into. Oh, I actually got into it more today. So I bought up through 1600, and I was looking to buy above this 1620, and I see it close at 1623. So I actually got filled in the one that I was keeping an eye on.
Nice.
The other one is this DRI, which is through 148, kind of a blue sky breakout.
Yeah, restaurant stocks.
Yeah. So again, probably not going to go anytime soon. It's past. Earnings is out of the way for some time. Probably going to pull back into this like 136-ish area before we see that 148. But I'll just wait for it.
Yeah, that's a really nice earnings move it made, and this is all just an earnings flag. That could be a really nice setup soon.
Yeah. So the one question we had, this was like a big headline last week, was the proposed tax increase. If you had any take on it.
So for me, I'm a short-term trader, so I get taxed as ordinary income on my trading gains anyway, so I'm already hitting those crazy percentages, the 35, 37%, things like that. So, for me, it doesn't really affect me that much. It's not really going to affect... they came out with a stat today, it would only affect like 0.3% of the country or something like that. Mm-hmm. I think that something's going to happen. I kind of disagreed with your take, but you could say your take, and then I'm going to disagree.
Well, mine is just, again, it's proposed. The people that have to enact it are those 0.3%, those people that are, the multimillionaires that are going to hit the hardest. So the person who has to enact that bill is the person that more likely going to be affected the most. You look at some of these, what some of these congressmen are worth. It just seems like they're in their own best interest to not want to increase these numbers because they would be the most heavily affected versus the average Joe, who was probably the most nervous about it. That's just mine. Just some looking out for their own personal best interest, where I just don't see them wanting to really move the needle that much because they're going to hit the most. But
I just see you got to see the underlying climate change, the underlying political climate changing. Mm-hmm. Where a few years ago under Trump, this would have been like the most craziest thing to ever be proposed. And now, a Democratic-led, Congress, I could definitely see some. We're going to hear more about it later this week. Yeah. I just think because these guys are worth a lot doesn't mean they're not going to make the law. It's things pretty proposed.
Yeah, we'll see. But anyways, if you trade the Roth, it's not a problem for you anyway. So that's if someone hates it the most, you trade that account, and Uncle Sam's getting nothing. So that's always the easiest answer.
Right, and I actually saw it. Speaking of Roth. 70%, I think was the number. It was a really high number. Accounts with unrealized capital gains over $1 million. 70% were in things like Roth and accounts that are non-taxable anyway.
Yeah.
Which was just interesting to see.
Yeah. All right. So we went over the question. You want to go over good trade, bad trade?
Right. Oh yeah. Let's go. So again, I'll go through my quick. I've just been scalping like crazy. So like for example, this crisp, we see this 130 level. I'm not buying this for a swing trade because I'm kind of foot off the gas. One, where the market is. Two, with all these earnings coming up. So this is how I'm kind of trading these things. Where it's like, all right, we see this level in the daily at 130, and then we get the intraday executions, and it gave us this perfect flag on the daily at 130 right here. So I'm buying it through this. I'm buying pretty heavy, but I'm only giving it to the low of this intraday flag. Very, very tight risk. But again, when you're day trading and you have the tighter your stop is, the faster you have to be right. So the less of a probability you have of the trade working out. So when I'm doing these things, I know these things. I know my time frame is shrunk down. So when I'm right, I got to get rid of this stock. So I'm buying 130. When it breaks, it retested successful. I bought there. It looks like I'm kicking quickly here, 132, 133 area, but I'm only risking $1, so that's already 3-1. Got some kicks off 136 here, that's 6-1. And I have a bunch of trades like that where it's like, NVAX was sick today. NVAX. So we see, where it has this mini flag, and then it has the mini flag, around that 210, 211 mark. So it makes these new intraday highs. I'm buying this. I'm not even giving it to this 203 area. I saw the volume come in for 209. that's where I was really giving the stock to. Again, just a day trading pivot. This is not anything we teach in the handbooks or anything like this, because I know how difficult it is personally and how quickly you have to get rid of the stock when you're right. So, I had $3 risk. I'm kicking some for like $5, for $7. Then I got these like $10, $11 kicks off today. Those were great. But again, that's pretty much the MO. I've been doing this Roblox. Again, we see the last few days. We see this 72 area, a very important mark for it. I had 2 trades in the last 4 days where, I was just taking advantage of the momentum, bought some at the end of day, I kicked some into strength, got completely out of position, re-entered today when I saw the strength. And again, I'm kicking this into strength. I still have some for the swing, but again, I know my time frame going into these trades, so I'm treating them as such. What was the last one? I did really well with this square on the Thursday. This was the day, this Thursday right here, and we see this support level while I was buying it. I'm buying up off that support level. This Thursday was the day that we had that capital gains tax news. I was buying it, in the morning. Market looked strong, kicked something to strength. We got that capital gains tax news. I took pretty much everything off, got rid of the rest, break even. But again, you see, I'm, very, very short-term trades. I'm waiting for the earnings setups. A reminder, I can't hammer this enough. Earnings flags, earnings trades, all those post-earnings trades are always when we make the most money. So right now I'm just kind of slapping the puck back and forth until we get those setups. That's really more my focus has been. Bennett, what you got for us?
All right, so first one, if you go to the email, Lisa Pellegrin had a really good trade in this YUM that
nice.
Definitely worth going over.
It's up.
All right.
It's stuck.
Okay, so she bought up through 105. This is like one big thing where like her first sell was she held it up through that breakout. She sold on the way down. So we always emphasize buying on the way up, selling on the way down, which kind of is hard for most to comprehend without being able to visually see it. And it's a prime example. She bought 105, 106 on the way up as YUM was rising. As it took out that prior all-time high, she didn't sell into that. What's expensive to get more expensive. But when it started to reverse, she sold on the way down. It put in a new pivot. She upped that stop to basically break even. And she continued to ride it higher and continue to up that, her stop versus those pivots. She kicked some, and then she eventually got stopped out when it started to roll back over. So I think it's just a very simple swing trade.
Great trade.
It's just like all around. Like I think everything she did was just really well. I don't think there's anything you could have really done differently. So just a great
106
trade.
retest. That's the rebuy.
Yeah, well, that's I guess the other thing is keep a close eye, and if it does come back down, look to buy it back again on the way up. So that was one quick one I want to go over, and then I have a couple really quick. This SCL took this one off trick again. We talked about earnings coming up. This is a blue sky breakout. Took it up through 131, but again, earnings is tomorrow. Not taking this into earnings being up, $1 in the name. So just so quick little trade. Next one over is this DHR, which is one we've been in for a while. Most of us are up about 20% in it. We bought up off support. It had a nice technical pattern through that all-time high breakout. But we just had a good, I didn't add to it. I just kept that original stock, held it through earnings, and we saw a nice opening range breakout as it's trading to do an all-time high. So for me, again, still holding it. My stop's versus 236. And my target in this is around 300. That's kind of really the next psychological level where we can expect some resistance to come in. Next, we have this QLYS, which I've been keeping an eye on. This 108 level finally went today. The real out is versus 100, but given how it closed yesterday and then how it reacted today, it seems like pretty much I can give it versus that 102 and kind of keep it a little bit tighter as it kind of fills into this gap. And what else do we have? MELI was, again, another one that I talked about a little bit before, was keeping an eye on this 1600 level. Bought some, and then we can kind of see how kind of 1630 was probably more of this, a little bit more of a significant area than the 1600. So I put a buy stop in to buy above that. So I'm keeping that versus 1500 for now, with the goal of trying to hold this MELI for it to work its way back to that $2,000 level. And that's it. The rest of the names still in. The UPSs.
UPS earnings tomorrow. You ready?
Yeah. We still holding that one. I don't really expect this to, gap down below, 155 on earnings. So definitely feel comfortable holding that one.
It could,
but
sure
it's going to be a couple percent loss.
I think the implied volatility was like was like $12 or $13 on the earnings move.
Okay, so we'll see. But yeah, it's the same. UPS still holding. APD still holding. AbbVie. Those names like not out of them yet. Well, that was UPS, MMC still in. That has earnings tomorrow. Again, sold. I mean, both through 120. Again, if this thing gaps down and it's at 116 or lower, I'll take the loss. But I think I have enough of a cushion in that. And then AbbVie still holding. We kind of held through a lot of that. With a little bit of a grind, and if you take out that prior high, that 113, 14 area, then it's the next real battleground is that prior all-time high, that 124, 125 area.
That thing looks great.
Yeah. So those are kind of what I got going on. You want to get into book of the week?
Yeah, sure. I kind of I'm almost done with this Contagious. It's a pretty good book. Very simple. I'll give some. It touched on six main points of what get people to really talk about your content or whatever it is. Mm-hmm. The first one was social currency. Things that make us look smart or things that make us look cool. For example, it was the Snapple facts. Was like everyone loved to talk about Snapple facts when those first came out. Then the second one was triggers. Top of the mind equals top of the tongue, or top of the mind equals tip of the tongue. So their example in the book was Mars Candy. So, the people that make M&Ms or whatever, the guy's last name was just Mars. Didn't have anything to do with the planets or anything. But in 1997, when NASA had this project set up that they were trying to go to Mars, they saw sales increase like 300%. The third one was emotion. If you could tell emotional stories, when we care, we share. The fourth one, here it is. Was built to show, built to grow. It's like if you can make a good public showing. Appearances are kind of everything. Like you go to a cafe, you see someone with a MacBook, with the Apple logo. It's like, all right, they probably have some sort of life figured out. Practical value is the fifth. Like news you can use again. Like it was relating to like Snapple and things like that. And then stories. Just if you tell more stories, people love telling stories. Information travels under the guise of idle chatter was the phrasing he used. So that was really it. And I was reading this other book. I just have such a hilarious fact. The Hour Between Dog and Wolf. Remember that? Mm-hmm. So I have the audiobook. I was just listening to it. And when the market's at highs, here's the stat of the day. When the market's at all-time highs, masturbation numbers are through the fucking roof because of all the testosterone being created from all the money being made. So, heard that. I don't even know how you get that stat, but so it is what it is.
Can you confirm or deny?
Can I relate? Nah, son, I got bitch. Kidding. All right, your turn. Jesus, get me out of here.
All right. So I'm still on Anti-Fragile. I don't know if the book is just
you're gonna be on that one for a minute.
Nah, it's been a week. I'm halfway through it. Not really many like folded pages or like anything that I felt was very important. I don't know if it's just the book's too smart for me, but
that's what I'm saying.
It's just like I'm like I don't know what I'm reading, but
yeah.
There was like one thing about he just talks about kind of the randomness of news and how people like overemphasize it on the short term. It's like one paragraph that relates to the market in the 150 pages I've read so far. But what does he say? Let me see here. I had this underlined. So when you look at information on a yearly basis for stock prices at a yearly frequency, the ratio of noise is like 1-to-1. So if you look at news on Snapchat over the last year, there's probably one or two big headlines where day to day, like today, there's this secondary offering. It's news, but it's not really that significant for most people that are holding it for the long term. So that was just kind of his one little take where people kind of overemphasize short-term news versus kind of the bigger picture news that really matters. And again, it's very hard to decipher what's what. But yeah, really I don't really have much really to add on this book so far. I just think this guy's maybe too smart for me to pick
I saw
up
it. Well, I mean, maybe you have more in common with this guy than you think. I saw Taleb, who wrote the book, came out over the weekend. He said,
the Bitcoin
Bitcoin is the greatest Ponzi scheme of our generation.
Yeah, I did see that.
Like that?
I mean,
talk about masturbation rates for you. Yo, let's get out of here.
Yeah,
Let's get out of here.
we're done. We're done.
Cut,
All right.
cut. All right, guys, like, subscribe, questions, I don't know. Same thing every week. See you guys next week.